Hi, my name is Dale Verran. I'm the CEO for Fortune Bay Corp. We are an exploration development company. We listed on the TSXV under the symbol FOR and also trade in Frankfurt and on the OTCQX. We have three sort of buckets of projects. Our flagship asset is our Goldfields project in Saskatchewan. That's an advanced gold project where we've just completed a PEA with a robust set of economics. Right near our gold project in Saskatchewan, we have our two uranium projects. These have potential for these high-grade Athabasca Basin uranium deposits, and initial drilling last year showed uranium in the right rock types, and potential looks great for discovery on those projects. And then we also have an asset in Mexico that's a copper gold project. It's got a gold resource on it in an epithermal deposit, but also a large porphyry system that hasn't yet been explored.
Dale, thank you very much for the introduction. Good to speak to you. A lot going on in the company. Let's start off with the Goldfields Project, the PEA they put out last year. A terrible year for gold last year. Torrid time in the market, both in terms of metal price and also sentiment. You actually, I think, put your PEA out pretty much at the bottom of both of those kind of dips, the metal price and the sentiment. Can you just let's just kind of review last year and the PEA, please?
Yeah, so a busy year for us. Obviously in terms of timing, one never knows where exactly the market's going to move, but we stuck to our plan and did the study, the PEA. We released that early November. And we did the base case there was $1,650 an ounce for the project. And it's an open pit PEA, and it produced at that $1,650 gold price an after tax NPV of $285 million and a IRR of 35%. Obviously today, a few months later, things have changed radically in the gold market. We've seen the gold price move up to today sitting at $1,920 an ounce. And that's near our upside case for our PEA, which, the PEA would now produce at $1,950 and in after tax NPV of $460 million and an IRR of just over 50%. So those are some exceptional sort of numbers there, really compelling. We're really pleased with this PEA. I believe it's a robust study, and obviously not getting the credit though in the market for it yet.
Well, and how can you explain that? I mean, I know that always a junior company will trade at a discount to NPV, but that discount isn't normally whatever it is, 97%. I mean, your market capitalization is 16 million Canadian. Sorry, were those figures Canadian, those US or US?
Yes, those are, apart from the gold price, yes, the NPV figures are Canadian dollars.
Canadian dollars. So, I mean, you're trading at this huge discount. Why is that, and how do you break that discount? How do you close that discount?
Well, firstly, I'd start by saying I don't think we're entirely alone. I think you've certainly seen the gold producers respond to this increase in gold price, but you've certainly seen a lot of juniors still stagnate and haven't really necessarily turned the corner yet there. And I think that will come as we see the gold market stay at these levels or even improve further. In terms of some of our peers in the space, explorers, developers like us, we certainly trade at a significant discount. So I think you'll be hard pressed to find a cheaper valuation based on a EV per ounce basis. We sit at around, if we include both our gold project, our Goldfields project, and our Mexican assets, our EV, US dollar EV per ounce or resource per ounce is around $4 an ounce. If we just put Goldfields alone and took the EV of the company, that gives us around $9 an ounce. And that's compared to a sort of peer average of around $30 to $40 an ounce. So we definitely trade at a significant discount. And it's part of the reason I'm talking to you, Merlin, is that we do need to get the story out there and get people to understand what we have in terms of our gold project and where it can go. We think it's got, outside of those pure economics, it's got a fantastic strip ratio. It's the best we've seen in Canada amongst open pit projects, 3-to-1 strip ratio, simple metallurgy, free milling gold, and it's in Saskatchewan. It's a fantastic mining jurisdiction, It has infrastructure on site. We're near the historical mining town of Uranium City. There's a road to site. There's a hydro power line to site that's obviously not active at the moment, but can be used with refurbishment. And we have there's a historical valid development permit for the project. In other words, it's had an approved EIS, environmental impact statement, and has been screened previously by the government of Saskatchewan and been approved for development. And that's an open, yeah. That permit is still valid, but the scope of the project has changed so much. We've taken this project, it's been around for a while, we've improved it significantly through exploration and looking at a larger gold development project. So the permit that was initially granted was for a smaller development. We're looking at something that's larger now. So we have to assess those changes and whether they can be done using the existing development permit under some amendments, or if the project's going to require additional screening. But all told, having a project that's already been through screening is advantageous, and we expect it will facilitate the timeline toward construction and operations.
Thank you. Yeah, of course. I think once it's in the system, once the environmental teams have looked over it and it's got a baseline, presumably the baseline data isn't going to change no matter what the scope of the project is. So that's an important aspect to have done right there. It's just really interesting, isn't it, that you're trading at such a discount to your peers? You've effectively said 3 to 4 times potential closure of that discount. When I look at it on an NPV versus market cap basis, you're trading at 4% of NPV or just under.
Yeah, certainly discounted. And we've looked at some of these other open pit projects in Canada that have had studies done recently. Names like O3 Mining, Manita, Bonterra, Benchmark, Spanish Mountain, Maritime. And if you look at our project relative to those, you'll see that, apart from the strip ratio, we've got among some of the lowest capex to get the project started, a $234 million capex. That's Canadian, and that includes a $34 million contingency, so that it's conservative to some degree. Highly competitive all-in sustaining cost around $889 per ounce. The IRR, at our base case, sitting at 35%, now approaching 50%. These are compelling numbers, and if you look at our market cap relative to those peers, we have a good, robust set of economics here, but we haven't yet got the valuation. And it's really, for us, it's about getting that story out there and telling people what the project is, what we've done with it. People taking a look at that study. It's done by Senko and SRK, reputable groups, and moving that forward and getting that market recognition for the project.
I have seen a number of companies blanching or kind of not wanting to publish their technical studies in these high cost environments. Just in the last couple of weeks, we've seen a number of the big guys, the Rio Tintos and the First Quantums of this world, saying that their capital costs and their operating costs are up 20%. When you pull those capital numbers together and your operating cost benchmarks for this study, which was done in the hot period of inflation, do you think you've done enough to capture those higher costs and those higher operating costs and those higher capital costs? In other words, are the numbers credible?
Yeah, absolutely. Great question. And, the answer is yes. We've baked in all those inflationary pressures that we saw last year. We saw, steel, labor, fuel in the region of 20 to 30% increases. Now that was incorporated into those costs when we did the benchmark and we did the capital costing. So those are all included, and it is advantageous for us. I think as we see, we've certainly seen a little bit of inflation since October, but inflation is certainly slowing. So, our PEA is very much current with the inflationary pressures we've seen over the last while, and we believe those numbers are a realistic representation of what things would cost in today's terms.
Interesting. And when I looked through your list of opportunities at the back end of the PEA, a couple of things that you highlighted were metallurgy and ore sorting, and I wanted to ask, what do you see in the metallurgy that are potential gains on the recovery or the operating costs, and also how far have you gone down the ore sorting route?
Yeah, so in terms of the metallurgy, the recovery used in the PEA is a number of 95.3% gold recovery. We think there's room to increase that. Certainly historically, we've seen the gravity side of the circuit, test work done showing that up to 50% can come out through gravity. We've estimated at 25% coming out through gravity. And then, we believe there are numerous improvements that can be made in the plant to help increase that gold recovery. And what we really need there is some more test work. So as we move toward a PFS, getting some more material and doing some particularly variability testing. And that means testing rock samples from across the grade range and seeing where improvements can be made. So we think there's an opportunity there. On the ore sorting side, we did do some scoping work that was done with SRK prior to the PEA, and at a more of a desktop level showed that ore sorting could have improved project economics. That was only desktop work. So as we move into, toward a PFS here, it's something we want to relook at in more detail and actually do some physical testing of rock samples to see how ore sorting can improve the project. And it's a twofold effect. One, it can improve the economics from a pure processing side, but also you reduce your tailings significantly. And that also has some cost benefits to it, to have less tailings, and obviously advantageous also from a permitting point of view. So it's certainly something we'd like to look at, and we think the project is amenable to an ore sorting process. It requires.
Will you be able to combine the ore sorting test work on the samples that you take for the metallurgy? Will you be able to take one suite of samples across various geometries of your ore body, drill holes and bulk samples or whatever it is from surface, and use that both for metallurgy and for ore sorting?
Yeah, we think drilling some larger diameter holes, we can use the core from those holes for both analyses. Obviously, both processes would be destructive, but we could generate enough material from a single drilling program to test all those scenarios. Plus, we do have a lot of material on site. We did some exploration drilling, so we have some representative type material that could be used at the early stages, certainly from an ore sorting point of view, to assess the characteristics of the mineralization.
Because that would be a great win. For example, that difference between gravity from 25 to 50%. Let's say you can achieve some level in that range, whether it's 30 or 40% or whatever it is. It'll still be give you a processing cost benefit, and if the ore sorting works to some degree, it'll give you a throughput benefit and a potentially a recovery trade-off with the tailings. And so all of those would be really useful for the PEA. Have you managed to incorporate any timings or budgets for a pre-feasibility study? Have you looked ahead that far?
Yeah, we certainly, and in our PEA tech report, there's obviously recommendations there, and the recommendations are to advance the project. It's clearly got a robust set of economics. In there's a PFS estimate of $3.2 million to complete a PFS study. We think that can be trimmed back to less, perhaps around $2.5 million, but that's something that's got to be costed out in a bit more detail, and the PEA itself needs to be designed in further detail before we obviously advance into that. But we certainly are aware of the key things that need to happen, the data collection toward a PFS study, and are building plans around that. Outside of just moving to the PFS, we're obviously looking more carefully now at the permitting side for the project, and have initiated some discussions with government around the existing permits and the scope changes we're proposing to the project, and how we deal with that from a permitting standpoint, and obviously looking toward supplementing some of the environmental baseline data. It's got obviously a really nice repository of baseline data already, but we will need to do a little bit of additional baseline data, and obviously good to start that early on so you stay ahead of things. So we'll be looking toward that for this year as well.
Good. And that brings me neatly onto budgets and cash position, and where are you in terms of your headroom?
So we've come through a really busy year last year, both exploring on the uranium side and this PEA on the gold side. We are sitting around $500,000 in cash. And so we will need to finance, in the coming quarter, for our plans for 2023. We've naturally held out a little bit toward the end of last year, just given the state of the market, and we're glad we did. The gold price has improved. We think the market's improving a bit, so I think we're entering a good time to refinance and start to and continue to advance our assets.
I know the quantum will always depend on the market conditions, and it's a trade-off between money in and dilution. But if you look at your budget, your wish list budget for 2023, you've kind of more or less indicated around $3 million for the PFS. You might want to have a little bit more, possibly. What are you allocating towards the uranium exploration mentally?
Yeah, so we've had some really promising results in the uranium projects. We had 2 projects, and we did some initial drill testing there. This is the first pass. It's the first time these graphitic rocks have ever been tested on these projects. And we're applying this Athabasca Basin model, and these initial holes saw some really exciting results. We've seen all the right things we'd want to see, all the right geological ingredients. We're getting some uranium. We know these trends we're exploring are prospective, they're fertile. So we would like to continue drilling. Now, the work we did in 2022 has helped us get a little bit of focus for what we're would like to do this year. So we're looking at a more focused budget to follow up on some high interest areas. So to answer your question, in terms of spend there, we'd be looking for anything around $2 to $3 million in flow through would be sort of a wish list kind of number. We do want to watch dilution. Obviously, our share price is low. So we'll look at, they'll be discussed with the board, and we'll go into financing that will be a disciplined, focused spend on the uranium to test some of these priority areas we've identified. And we believe we can make a discovery.
Is there a case for farming out or selling non-core assets and focusing on the kind of the intrinsic or the embedded value in Goldfields? That must be a discussion you have regularly internally.
Yeah, for sure. It's something we've obviously had challenges with. I think we've got some really nice uranium projects that would stand alone in a company and probably attract a valuation of 8 to 10 million. Looking at other juniors in the basin, we also have a really good gold asset, and we're not getting full value for the suite of assets. So the discussion of spinning them out has certainly come up. And we have looked at opportunities for that and been in discussion with other parties on that, but nothing that's quite materialized yet into doing that. So, for the moment, we committed to our strategy of being diversified and looking at the right opportunity to potentially spin that out. The uranium could go to a third party through a farm out. The gold itself, it's a project that's going to produce around 100,000 ounces per year. It's certainly not the types of numbers that would attract a major, but certainly the smaller or mid-tier producers might be interested in adding that to their production profile. So that could be an avenue for the Goldfields project as well, in terms of a divestment or bringing on a partner from a mining company.
So you're open to doing a trade on that as well, to kind of almost that's I know a company that's done that, which is take their advanced asset and farm out a majority position and get a free carry. And that leaves you free almost as a project generator or a prospect generator or a true kind of grassroots explorer.
Yeah, that's right. And our broader exploration, our broader sort of business model is really on the exploration development side. We want to be able to generate projects and make discoveries, take those through early stage of development, and then realize value that way. So, Goldfields at a stage, while we would see that it's obviously warrants advancement, we will continue to do that. But if the right opportunity comes along to bring in a partner, that's something we will look at, provided it's a good deal for our shareholders. And then we, like we've done with our uranium, we can turn to earlier stage projects and bring those through discovery and development. So we continually do look for other projects from a project generation standpoint, and have some good ideas for the future of the company. But we, certainly continue with our current assets and believe we have a nice mix of a development asset that really underpins the value in the company and will believe it will grow. And then we have these earlier stage uranium assets that offer tremendous upside for investors.
It's funny. I wonder whether you'll actually get the value for the gold project unless you commit to doing it on a 100% basis and everything else becomes non-core. Because in some ways the market likes a simple, clear, direct story, which is Goldfields is undervalued. We're developing it. Boom. We're going to pick up our lunchbox and put it under our arm and head off to the horizon until this thing is built.
Yeah, no, and we certainly recognize that, and that is why it's something we've been looking at and looked at some options over the last few months on that. So and we will continue to do that to realize value for our shareholders. Good.
Well, I mean, it's a crucial time, isn't it? The gold market's strong at the moment. Are you getting interest on the uranium side of things? Do you feel that that's buoyant from the exploration side? Is there interest in your portfolio?
There certainly is. I think just on that side, we've got an experienced team. Myself, I've worked with Denison Mines in Canada for 5 years as their VP exploration and been involved with 2 discoveries there. And part of our team, we also have guys who are ex-Cameco, NextGen and Fission. So we do have a lot of expertise. And I think certainly amongst the explorers in the Athabasca Basin, they know who we are and they've looked at our projects and they recognize what we're doing. So we've seen a lot of interest from other companies in our approach. We using an exploration model in an area with an amazing amount of uranium endowment. I mean, the Uranium City area has had historical uranium mines, but this Athabasca Basin model for these high-grade deposits hasn't been tested in that area. The historical mines are of a different type. They're these beaver lodge type deposits associated with granites. And the graphitic rocks, which are these Athabasca deposits, they obviously erode negatively. They sit in the valleys, and no one's gone in those valleys and looked for these deposits. And we started drilling those last year, and we saw the right things. And we're an experienced group of guys looking at that. We're seeing the right rock types, the structure, the alteration, and we're seeing some uranium in these structures. So it's really exciting. We've got a lot of strike potential there. 30 kilometers on Strike project, 50 kilometers on the Murmac project. And we got to continue to test these. And we have some nice ideas and some focus now to go in and test some targets there. So, technically we've got a good project. It's tougher to communicate that to the market and get that traction as not as you say, a pure play uranium explorer. But I think our projects, stand up really well, and we're really excited to advance those.
Just on that uranium, so you've got the Athabasca Basin, and then the limit of the Athabasca sandstone, which kind of is, when you look at the map, that's the Athabasca Basin, but it was obviously larger and has been eroded. So are you underneath kind of the eroded? Are you outside of the sand, the today's sandstone, but underneath where the sandstone used to be?
That's 100% correct. Yeah, we are sitting right on the margin, that northern margin of the Athabasca Basin, and that basin was certainly much larger. We've seen discoveries on the edge of the basin like Arrow with NextGen, Triple R sits just outside the basin. Those settings are very similar broadly to what we're looking at on the northern rim. We've got the same rock types, the right rock types, but it hasn't been tested. So that's exactly what we're exploring. We're looking at not in the sandstone, but in these competent basement rocks. And why those are such good targets is because they're shallow and they're in these competent rocks which allow for conventional mining. If you're finding these high-grade deposits that sit in the sandstone, that sandstone's water saturated. So mines like Cigar Lake, MacArthur River, you need freezing, complex mining techniques that are costly. Whereas if you're just outside the basin, you potentially could even be looking at an open pit scenario or conventional mining. It's going to bring your costs down. So they're very attractive targets. And in our case, they're attractive not only from a geological point of view, but we're in an area that's had historical uranium mining. It's a mining community. So from a permitting side, there's a bit of infrastructure. We have some advantages there in terms of there's a hydro power line that runs past both projects, the town of Uranium City offering facilities. So we really like the exploration scenario. We think it's really compelling, and they've got some initial results to demonstrate. So we need to keep moving that forward.
When I look at your maps of on Strike and Murmac, there you've got all of these electromagnetic conductors, and my understanding of Arrow and Triple R is very dominated by the structure. You've got these major shears that run through. Do the Arrow and the Triple R's of this world have the same electromagnetic conductors, and what are they? And are they picking out structure?
Absolutely. Structure is key, but both Arrow and Triple R, they also sit on electromagnetic conductors, and those electromagnetic conductors, it's picking up the graphite in the rocks, and almost all the known Athabasca high-grade deposits or have this association with graphitic rocks, and that's why people go out and do electromagnetic surveys to pick up the conductors, which are the graphitic rocks, and that's what they sort of test for these deposits, and that's certainly how deposits have been found, recent deposits. So, the geology and the structure is broadly similar to what you're looking at on the southwest portion of the basin, where you find Arrow.
And do you vector mostly with EM? I mean, is that your principal vectoring tool, your principal exploration asset?
Yeah, EM provides you with a target horizon, but to target along that EM conductor, you need something else. So gravity's been shown to be effective. In the case of Arrow, that was shown to be effective. We've done gravity, and we've tested some of our gravity targets, and obviously getting some results there. Otherwise, you're looking at, from the drilling itself, getting geochemistry along the EM conductors, and then using that geochemistry to help vector into more promising areas.
Okay, so the geochemistry will tell you whether you're close or far, proximal or distal to an alteration system.
That's right. Geochemistry, as well as looking at other features like cross-cutting structure and things of that nature, structural settings.
Well, the uranium sounds interesting, although it was quite a flat year for uranium exploration last year. I mean, a lot of the uranium stocks went sideways or down as well. I mean, maybe it was just the general risk off. Going back to the gold project, I just wanted to kind of get a feel in my head for what kind of rock it was, and what kind of mineralizing style and hardness and freshness and those kinds of questions.
Yeah, so they're quite simple gold deposits. It's really vein-hosted deposits, and these veins, they're quartz veins that sit within these granites. Broadly speaking, it's an orogenic type model. And what was never done previously was there was never any geological models for these two gold deposits on the Goldfields project, and that's something we did. We put geological models around these. We spent a lot of time working with our team, as well as structural experts from SRK Consulting, and put together structural models that better reflect or better honor the actual geology of these deposits. And those structural models have been the basis for our new resource estimates. So they certainly believe they're more reliable, robust resource estimates. But the deposits themselves, very simple, just the low strip ratios I mentioned. So they're these wide granitic bodies that have these quartz veins in them, sometimes structurally controlled, occasionally more of a stockwork nature. And there's no deleterious elements, so very low other elements other than gold, which makes it a very simple mineralogy and allows for free milling gold.
Dale, thank you. That's really interesting. Now, tell me about your shareholder register and who's in the stock at the moment. Is it have you got any funds in there, or is it largely retail? Some clarity on that would be really helpful.
Yeah, we do have some institutions in there, relatively smallish positions there at the moment. Obviously, looking to grow that side of it. Outside of that, it's largely retail, and a lot of that through Fortune Bay's board and management, and their connections. So it's still very tightly held. 15% owned by board and management. And just 43 million shares outstanding. So it's still really tightly held company. And obviously, as we advance and grow our projects, we'll look to expand the shareholder base. But for now, certainly a really tightly held company.
And the bit that I've struggled with is the strategy and the clarity of what the company is going to be doing, because you've got so much optionality there. In a sense, what I'm there's Mexico and uranium and gold and development and early stage exploration. Can you give me your kind of investment case pitch? Kind of synthesize the investment case, please.
Yeah, so we first and foremost, we're explorers and developers, and we have these two gold projects. Goldfields is our most advanced project, so that's in the early development stages. We have the Mexican asset. It's an asset that we can turn to as a pipeline project to unlock value, and we have these early stage uranium projects that offer upside potential. So while we are diversified, our strategy is quite simple in terms of we look to acquire projects, take them through discovery and development, and we have a set of projects across that spectrum at the moment, from our advanced Goldfields project to our earlier stage uranium assets.
Very neatly done. Well, there we go. Why don't we leave it there with that as a conclusion? And I look forward to seeing you probably once you've done your capital raise, and it'll be interesting to see what the investment community kind of asks you to. Your strategy may be molded by interaction with the funds. And we'll be able to see how the next quarter goes in terms of the gold price. But thank you so much for your time today, Dale.
Yeah, thanks a lot, Merlin.